going to keep this video really short this week because I did a pretty extensive one last weekend that talked about further targets to the upside as well as further targets to the downside. So for now, I'm just going to focus on where we are at and where the immediate upside and where the immediate downside might be. If you want some further information on further targets, just go back to that video, which I've now made public on my YouTube page. Anyway, let's take a look at this intraday chart from Friday on the S&P 500. You can see that we kind of struggled inside the initial balance range most of the day and churning around the 20 line. But at the very end of the day, in the final 10 minutes, we made a breakout over the initial balance high, over the 20 line, made a new high for the day, and closed at the high of the day. Since it was monthly OPEX day, there were probably some big bets still left over for the Friday end of day calls and puts. So this sort of tamping down action is really just related to that, in my opinion. However, it could bleed over into Monday. We often see that. So if we don't see a big move to the upside or downside out of the open on Monday, and we're just kind of stuck in a range, wait it out. Let's see where the support comes in. Should come in at the 10-day simple moving average. If it doesn't hold the 10-day simple moving average, it should be down at the 20-day and a hold above Friday's low. That would be where we would want to look to buy some calls for a turnaround Tuesday, because I do believe we've got some pretty intense earnings that start up on Tuesday. I think Netflix reports after the bell, and some other names that could really move the market on Wednesday and into the rest of the week. All right, let's look at the roadmap, and you can see that once we took out the 10-day on Friday, we nearly doubled up the day. But like I said before, there was probably some option bets that were tamping us down and capping the upside. If we come out of the gate higher on Monday, we're looking right towards our 50-day simple moving average by way of getting through the June halfway back at 39.07 and change. If we look back at that intraday chart as well, you can see that there's a gap to fill at 38.99.38. So probably trying to get through 3,900 would be that first line in the sand to try and break through. And then after that, moving on to the June halfway back at 39.07. Something pretty interesting here that's lining up right to our 50-day simple moving average is the top of our bear fork. It's only going to take a move to about 39.24 come Monday, and this is a falling level with each passing day. It's only going to take a move about 39.24 to break out of our bear fork. And you can see that once again, the 50-day simple moving average aligns right to the top of that bear fork as well. So if there's this nice move to the upside on Monday, or if we end up with an inside day that takes us back down to test and hold the 10-day, or even back to test and hold the 20-day, I think that that's an opportunity to buy some calls for this attempt to break out on Tuesday ahead of those tech earnings that start up after the bell on Tuesday. Speaking of tech, let's take a look at an indicator for us. Though Apple is not going to report until a little later on. It looks like July 28th after the bell. Apple made a really big move on Friday. It finally moved above 150 and closed above the 150 handle, and it's staring right into the face of its the median line on its bull fork. And once it breaks through that, it's got its own bear fork that it can easily break out of, and it would go after its 200-day simple moving average. So Apple's been a great indicator for us by closing above its 50 days several days in a row and now making this move above 150. It's a really key spot for it if it can break over these highs that were set back here at the beginning of June. Perhaps the S&P 500 is going to follow suit. So always a good indicator here in Apple. So that's about it. If we're going to have, if I'm being too bullish here, and we're going to see a little bit of a pullback on Monday, I really think that, in my opinion right now, I think the most pullback we would see would be some kind of an inside day. If the inside day takes us below the halfway back of Friday's range, we're just looking for Friday's low and this 20-day to hold. And if I'm totally wrong and we break down below Friday's low, we do have a gap to Thursday's close, and that aligns really well with holding just above where June and the first half and Q2 closed at 37.85. You can see here's Thursday's close around 37.90 to 37.91, and the close for the first half of the year and the month of June was 37.85. So as long as we hold all of this, I think these are buying opportunities. If you get down here and you buy some calls on a hold of the 10-day and we start breaking the 10-day, you want to hedge those or just dump them, and you want to wait for this 20-day. And if that doesn't hold, then you want to wait for this 37.90 or so level to hold and fill that gap and reverse above this gap and take us back up. Okay, so that would be the most to the downside I think we would see. I don't think we're going to just pull the plug on this rally, not with that uncertainty of whatever those earnings might say come Tuesday after the bell. And that's it for me. I wanted to keep this video short. Also wanted to tell you that I'm going to tweet as normal this week, but then I'm going to take some time off to enjoy the summer. I'm going to take about a week and a half off. So the end of July and the beginning of August, I won't be tweeting, but I will be back sometime around later in the first week of August. So this will be my last week for about a week and a half, posting videos, charts, and tweets to my private account. So that's it. I hope everybody's having a great summer. Hope everybody's making some money. As always, good luck and good trading.